What is up, everybody? Today we're going to be examining what many YouTubers have actually done towards the end of 2024 in their predictions of where the market is going. To no fault of their own, they're basically doing what everyone else is doing, is taking whatever data is available to them and then thinking that if everything continues to move status quo, then they actually draw up this conclusion that this is exactly where the market will continue to move. However, if there is one thing that we've actually noticed since inflation has become such a thorn, is that things actually move much quicker. The rate of change within the economy happens within seconds. So it's very difficult to determine what is going to happen to the economy, and especially in our case, examining real estate and seeing whether or not it is actually going to trend in the direction that people may think about. But the reality is one piece of news can actually derail your whole way of thinking. And there were several times where we were thinking that, oh, the rate cuts were going to be coming in 2023. Well, no, it didn't. It actually went up 3 consecutive times thereafter at a quarter basis point. That actually derailed the real estate economy even further. And yes, we do know that quantitative easing is going to happen, but we don't know exactly when. Now, many people are predicting that this is going to happen in Q2, and I think that the news that we have actually received just lately about the US CPI index has now derailed us and more than likely has pushed us into Q3 at least. Economists are now predicting that there is a 75% chance that rates are going to come down. We don't know by how much. They are factoring in roughly about 150 basis points, which I personally think is a bit too aggressive. I think maybe 100 basis points might be enough in 2024. There is a 15% chance that nothing is going to happen in 2024. And economists have also factored in a 10% chance that rates still may continue to go up. Hi, I'm Paul Sawhney. I am a realtor, mortgage specialist, and real estate investor here in the GTA. And my goal in all these videos is to arm you with enough data and enough knowledge to help you along in your real estate journey. If you have any questions regarding real estate, mortgages, or real estate investing, be sure to contact me via my Calendly link. The link is in the bio below. This is a free consultation where we can discuss all things real estate, all things mortgages, as we provide mortgage services, and real estate investing. There will be some new videos coming out on actually how to get involved in the real estate market when it comes to multifamily. But when it comes to single family, I also provide tips and tricks on how to find properties during high inflationary period and high interest period. So the question really comes down to, are these predictions valid, and will they actually continue to trend in that direction? The true answer is no. I remember last year in 2023, people were predicting rate cuts as soon as Q2. Nothing of the sort had happened, and in fact have gone up. So the reality is one sliver of news changes the direction in which the economy, at least when it comes to the overnight lending rate, can derail the plans for the Bank of Canada. And just a few days ago, the US had released their December CPI numbers, and bad news came in. And it came in higher than expected at 3.9% versus 3.8%. Now, these are the core inflationary numbers, which has now changed the direction in which the US was going to be cutting rates, as they had factored Q2 QE reductions. And now the question really becomes, is the US is actually following a sentiment of staying higher for longer. And because the numbers were actually higher than what was expected, these rates are now predicted to stay higher for longer. And therefore, the Bank of Canada will continue to hold their rates as long as they possibly can before they have no choice but to reduce rates. And further to that news of the CPI, the US job numbers actually came in stronger than expected also. So as a result, now we have two factors that the Federal Reserve was actually looking to see some weakness in so that they can actually begin the process of quantitative easing. I don't think necessarily that it's going to be quantitative tightening, but we might have to wait a while until we actually see our first rate cut. So how does that affect us? So now we're looking at the US potentially considering a Q3 rate reduction. That is when the Bank of Canada would actually be considering their first rate cut. Now, the Bank of Canada has some flexibility where they might be able to do something just slightly earlier, knowing with some certainty that the US will be reducing their rates. But if they don't, things will actually turn on us and then continue to cause further inflation as our dollar value will actually decrease. And then there's a whole vicious cycle with a devalued currency. So if anyone comes along and tells you exactly what the economy is going to do and where things are going to go, those are just their predictions. So here are some of the things that I've actually learned throughout this whole period, because in the past I had never really paid so much attention to the inflationary rate and all the peripheral economic indicators that really affect the real estate market. But I think it's a blessing because it's actually taught many people what actually we should be looking at when we are examining real estate as an investment. Now, I know that many people, when they're doing real estate investment, they're looking more so at what kind of jobs are available, what the population is of that particular city, and the amenities that are located within that city. Now, those things are fine and dandy, but there are a lot more things at a macro level that we do also need to factor in, and hoping that in the future we don't have to deal with such aggressive inflation that we did face coming out of the pandemic. So what are some of the factors that the central banks are actually looking at when considering lowering interest rates? And there are actually two very big stats that are coming out right now that we really need to keep our eye on and hopefully change the minds of the central banks and potentially reduce rates sooner rather than later. And the first thing is they are actually looking at a 0.5% increase in the unemployment rates. So that would mean that the US economy is going to be at 4.5% and the Canadian economy at 6.5%. And another factor that the central banks will be looking at is the actual rate at which wage growth is occurring. They didn't receive a lot of good news with this on the US side, where wage growth went from 5% to 5.7%, which is massive. And so these two indicators here are actually fighting with each other. And the issue really is we need unemployment to continue to go up, but at the same time, we do not want so much wage inflation. So mark your calendars on January 31st. The US will be releasing their ECI numbers. ECI stands for Employment Cost Index. And this is actually a measure of how much wage inflation there was. And if we see that there's a further increase, that is unfortunately going to indicate some negative news and possibly hold rates for a longer period of time. As I mentioned in the past, there is not necessarily a direct correlation to lower interest rates resulting in higher real estate prices. But in our case, because of the limited supply that we have, because of the affordability issue, you can see a correlation between low interest rates and higher real estate prices. Now, coming out of the situation that we're in, I do believe that it will be a slower process. It's not going to jump up 10, 20% like we've seen last year, but we will actually start seeing home prices gradually increase. Some people are taking advantage of current house prices, and actually home prices are baking in the rate reductions into the price of their homes, and now you can actually start seeing homes selling quite rapidly. And so I guess we'll see when I do my market report next month, we will actually see what the home sales were. And I do believe that we'll see an uptick there. We actually have to see how many listings that were terminated in mid-December and now have relisted again in January to see what kind of effect it has on the supply and, as a net result, home prices. And I've actually even seen some home prices that are selling for greater than even the list price. I hope you found this video of value today. Please be sure to like, subscribe, hit that notification bell if you find this content of value. I also encourage you to share this video with somebody that might be in the real estate market, be it a buyer or a seller or possibly an investor, as it may help them in ensuring that they don't make a certain mistake. So for now, stay informed, stay curious in your real estate journey.